Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Razan Pereira. The Reserve Bank needs more powers to oversee public sector banks, Governor Urjit Patel told a parliamentary panel on Tuesday amid mounting bad loans in state-run lenders. According to PTI, the RBI governor who appeared before the Parliamentary Standing Committee of Finance faced tough questions from lawmakers on bad loans, bank frauds, cash crunch and other issues. Media reports said that the governor assured the members that steps were being taken to strengthen the system. Regarding PSBs, he told the panel that the RBI has inadequate control over them. The governor asked for more powers to control the government-owned banks and said it was impossible to look after each and every branch of a bank in terms of an audit. On this edition of The Big Picture, we will analyze who's responsible for auditing banks and should more power be given to the RBI. Joining me on the program today are Ajay, former Secretary, Ministry of Commerce and Industry, Subhomoy, Bhattacharjee, Consulting Editor, The Business Standard, Ashok Nag, former Advisor, RBI, and Nitin Desai, former Chief Economic Advisor to the Government of India. Thank you to all my guests for joining me on this edition of The Big Picture. Mr. Desai, I'd like to begin with you, of course. First, let's talk about what the Reserve Bank Governor told the Parliamentary Standing Committee on Finance. He's asked for more power as far as the RBI is concerned. Should the RBI be given more powers?
I think the core of that argument was about the split responsibility for public sector banks. The RBI's powers over public sector banks are less than what they have over non-public sector banks. For instance, in terms of the board, in terms of the chairman, etc., etc. They don't have any powers there. And to me, this is the big issue between RBI and the government. Because the government is the owner, and can the government hand over responsibility for the personnel, the top-level personnel of banks, oversight to RBI, as is the case in the others? In my view, today, the way the banking system is evolving, also with the potential private ownership in some of the public sector banks, I think the distinction between private banks and public sector banks is now not very tenable. And the way the government has in practice exercised its responsibilities for the naming of the boards of the banks has not been a very happy one, because we've had past experiences of some very how shall I say, not exactly the best people appointed there. On the audit side, he's perfectly right. There are thousands of branches. There's no way the Reserve Bank can audit them. More than that, they are the regulator. Now, the regulator can't be the auditor, because the auditor has to accept some form of statutory responsibility for certifying the accounts. Now, you can't have both the regulator doing that. So there has to be a distinction between the person who takes the responsibility of certifying the accounts and the entity which is a regulator. So I think on the whole, Mr. Patel is right in the two arguments that he has made on the major changes that he is looking for.
Let me go
well, in any case, right now, as far as I know, they don't do the audits. So they are not the auditor.
Yeah.
In anyhow, what he's saying is don't ask us to become the auditor. That's
right. Right. So who's going to audit these banks then? Because the banks are extremely stressed at this point in time, Mr. Nag. The state banks, the PSU banks are saying that it is for the RBI to audit and come up with some kind of a resolution as far as the problem is concerned. And the RBI is, of course, suggesting that it does not have the wherewithal to sit and audit each one of these banks.
See, I agree with Mr. Desai that RBI is not, there is nothing in the Act says that RBI has to audit the branches, because it is a job of the auditor. RBI has given guidelines. In fact, if you look at the guidelines issued by the Institute of Chartered Accountants, what are the audit guidelines have been issued, and it clearly says that what the auditor is supposed to do. RBI's job is to see the regulations, the policies level, at the board level, at the kind of a governance architecture which is existing in a bank, whether it is in tune with the RBI's guidelines or not. RBI does make an annual financial inspection, okay? But that's basically to find out that prudential norms has been adhered to not to audit the transactions. Transactional audit is to be done by the auditors. That is not the job of RBI. RBI's job is to audit the governance architecture, adherence to the policies, and what is the board's kind of a supervision has been doing about the entire kind of banking, the banks they are managing. The point which is Mr. Urjit Patel is saying that yes, we cannot audit, it is not job of the RBI, but RBI power, what is saying in the Mr. Patel that we don't have the power, it is not correct. RBI under section 35 of the BR Act has enormous power. But what is the problem which is facing? I think it is a facing, Mr. Patel as a governor is facing, which is a correct problem is facing, but may not have been articulated in that way. It is the dual control. See, in the case of India, if you look at the cooperative banks, where there is a dual control of the banking regulator and the government, state governments, it is in a mess. Whenever an institution has been under dual control, then there will be always a kind of a divergence that the board has to follow what, and they would like to appease, they'll follow the RBI guidelines, or they will have to follow directions coming from the Department of Financial Company. This issue has been discussed a lot of time. In fact, there was a many times, I remember RBI Deputy Governor Mr. Tarapore was dead against that RBI members, RBI personnel should be on the board of the national banks. It is not the job of any regulator to be on the board of any particular bank. But it has been there because RBI is almost acting like a nominee of the shareholders of the, that is the government of India. We must have to have a understanding that what is the shareholder's job and what is the RBI's job. There should not be any kind of a conflation of these two jobs are there.
Sure.
The problem which is RBI is facing now, and it is a well-known thing which may not be articulated by any RBI personnel, that there is a directions on many credit kind of activities from the Department of Financial Company. If you get as the chairman of a bank certain directions that credit has to be given by a particular kind of a way, then obviously you may not follow the RBI guidelines on the credit norms.
Sure.
You may have to somehow circumvent that. And these are creating the problems. Most of the NPAs which has come here, if you look at the details, has come because of this kind of dual control of the activities of the bank. It is not that RBI getting not power. RBI has a power. RBI, even sees, for example, shareholder of the public sector banks is the government
Points
of
taken,
India.
Mr. Nag. I'm going to come back to you. I'm going to take the points that you're making to the other panelists as well. You know, Mr. Dua, as far as this particular issue is concerned, should we widen the scope of the RBI? Is that going to answer the problem?
I think it's necessary to specify the role of the RBI and the role of the government. What is yesterday's submission to the Parliamentary Committee, the Governor has said he is not in favor of RBI directors being, RBI nominees working as directors of the board. And that he is in contact with the Ministry of Finance about this issue. Second, he said the banks, public sector banks, are not really within the ambit of the Banking Regulation Act 1949, where the private sectors are, because the only banking companies come in here, and these tend to be more of corporations and not exactly banking companies. Third, he sought additional powers to be able to be more effective even vis-a-vis the PSPs. We've had some discussion today on these 9 or 10 bits of extra role which he's asked for. Prima facie, they all stand reasonable. What is he saying? That appointment of the chairman, directors, their super sessions, the giving directions is not a subject which he's touched at all. Like people thought that he can give directions on do this and other. He hasn't sought those. He's talking more about winding up of a company, a bank, licensing, as well as superseding the board, etc. Prima facie, they all look okay. I think the government should seriously look at it, and if any changes are required to be made in some law, it should be done. Otherwise, some of these could probably come through an executive action. Having said that, the fact of the matter is the banks certainly need to strengthen their audit system as well as their system of risk bearing. Mr. Urjit Patel has talked of three tiers of kind of risk assessment. And what's the first one? The guy who sanctions the loan. Then the managerial action, and the third is the audit action. In the context of Punjab National Bank, he said all three seem to have given way, and that's why we see it. limiting ourselves in the discussion only to audit, I think today 3 kinds of audits are already take place: internal audit, concurrent audit, and an statutory audit. There was a suggestion that the CAG should also be asked to audit. That will be a 4th tier, which he hasn't supported, and nor would I support that. The fact is that the other 3 audits themselves are not adequate. The supervisory audit, which is more to look at prudential norms, etc., the bank does, RBI does conduct, but it is for the bank as a whole, not branches.
Right.
Each branch transaction, these 3 audits apply. I think we need to seriously look at the banks need to be told that what they have to be looking for appointment of these auditors, etc., because that's the decision of the board of directors.
Sure.
But obviously there are gaps, and those need to be filled up, whether it's through guidelines from the government or it is from the RBI, needs to be seen. But their enforcement, thereafter the responsibility given to the auditors, will need to be closely monitored by the board of directors.
Sure. Subhomoy, after all that we've heard now over the last 10 minutes or so, let's try and put it into perspective. Where does the role of the RBI governor start as far as auditing is concerned, and where does it end?
As Dr. Desai pointed out, frankly, they're not the auditors. But is there any bank chairman who doesn't get uncomfortable if there's a phone call from RBI? RBI has enormous powers over the banks. The problem has actually been, I would say, that RBI has actually refused to share its powers with other entities. Let me tell you an example of the corporate bond market. The Financial Sector Legislative Reforms Commission came up with a very viable idea that the markets in India should be handled only by SEBI. RBI has fought tooth and nail against reducing that power. The payments mechanism, RBI has been told to get rid itself of those and focus on its job of regulating the banks. The problem with RBI is RBI has excessive powers in too many domains, and that is crippling its ability to go after, or rather, I wouldn't say go after, to look at its primary constituent, which is the banks. And that is why the question comes along. If our RBI isn't willing to share, then obviously people would say that here the buck stops with you. And you can't help the parliamentarians having that idea, because the parliamentarians won't be that sophisticated in terms of understanding the nuances of the division. They understand that in the broad parlance, the government of India is obviously the owner, it gives directions, but RBI is also almost looks upon itself as a governance structure, and it decides. So therefore, they'll say that everything, as the representative of the people, they'll say therefore the buck stops with you.
Sure.
This is where the problem has been with RBI. RBI has not allowed a regulatory structure to be clarified vis-a-vis the banks for years, because of the fear that this will lead to emasculation of its role. And it has been pointed out by successive commissions. Mr. Nag talked about Tharapur. He was one of the ones who led a massive, what I might say, the diatribe against this sort of a dilution. But successive committees have looked at this thing, the Rajan committee, the FSLRC committee headed by Justice Sri Krishna. They all looked at it and they said very clearly that this is not tenable, this is asking for trouble.
Right.
You become responsible when something happens. They asked for a rules-based system. The rules-based system didn't develop. So today, therefore, we have a system where no one is clear. Everyone knows there's a fraud. Some places there's a fraud happening. But frankly speaking, the public has the right to ask that are the right people at the right places there to handle the fraud. And as far as RBI is concerned, the questions would come at the end of the day that what were they doing if they were not willing to share responsibility?
Sharing responsibility, is that the key, Mr. Desai? And also,
I would say that basically, let me focus, move a little to a basic fundamental. A banking system has to run on trust. When I put my money into a bank, I'm putting in a lot of trust into that bank. And it's very important to ask ourselves, how can you maintain the trust of the public in the, if you like, the solvency, liquidity, and even the probity of banks. Well, probably not everybody will be concerned with the fellow, but what they are concerned certainly with solvency and liquidity. Why today we have not had a major problem of people losing confidence in the bank. Why? Now here we have to accept one thing, that one of the reasons for this is the implicit belief in the minds of most depositors, since these things are owned by the government, wo sarkar to hum bacha degi. You know, the reality today is that the ordinary Indian trusts the public sector bank because he has this feeling that worst comes to worst, the government will take care of any
the
problem.
situation would have been far more different if it was with the private banks.
That is so let us not jump to that conclusion. It is true today our private banks are running probably better in terms of NPAs, etc., than others, because they have not been made to get into the area the public sector banks have. Most of them are working on the retail loan side, etc. You see, in personal loans, retail loans, standard banking practices, whereas these guys got into term lending, particularly for infrastructure, for which they were not well designed. So I would say, if I had to focus attention today, I would ask myself the effectiveness and transparency of audit, and though as Ajay has correctly pointed out the levels. Second, the adequacy of the risk assessment mechanism. If today I had to fasten on one thing, I would say this is the assurance I want from the Reserve Bank, that there is an adequate scrutiny of the risk assessment mechanism with the banks getting into this, being in this area of term loans and so on. I would also agree with Subhomoy. Let RBI focus on this core area of maintaining the integrity and trustworthiness of the banking system, and the various suggestions which have been made by the Sri Krishna Committee and others on the broader framework of financial regulation we must start looking at. But the financial business is getting very complicated.
Right.
Branch banking will well disappear, 5-10 years from now.
Sure.
So I'd say that let's focus on fundamentals and address the issue of audit from that perspective. So I'd say there's a lot to be said for the issues which Urjit has raised, and I think there's a lot of things which the Department of Financial Services should do. Ideally, I would like to abolish that department.
Okay.
I think ideally I would like to abolish that department and keep an arm's length relationship between the government and the public sector banks that are there, perhaps with a holding company, I don't know what.
Give them a little more autonomy is what you're
Not
suggesting.
only that, distance it.
Okay.
Distance it.
Sure, sure. Mr. Nag, as far as what the RBI governor told the Parliamentary Standing Committee yesterday, do you believe that the issues that he has raised, some of the issues that he has raised, are justified?
See, the one issue that he is asking for more power to the RBI, I agree with Mr. Bhattacharjee that RBI has enormous power. If you look at the act of the BR, whatever is there, because see, nationalization of the banks, the act does not supersede the BR Act. Okay, BR Act gives enormous power. RBI Act gives enormous power to RBI, even to the public sector bank. If the RBI wants to exercise power, they can sack a chairman of the bank. The Act does not say anything that it does not have the right to do that. Question is that whether you will do or not, that's a different issue. Point is that another question which is raised, that RBI is a core issue. RBI should look into, and RBI should there should not be a turf war between the other agencies. I think this is not exactly true in some extent, because RBI has really developed many institutions which are there today. For example, Unit Trust was developed by RBI, the IDBI financial institutions are developed by RBI, and when it came, NABARD was developed on RPCD, and when they became mature, RBI was definitely they segregated from the RBI. So it's not that RBI was always holding back to the institutions it tried to develop. Today, if you look at the National Payment Corporation of India, which is a child of the RBI, and it has gradually becoming a power of its own, and it are trying to modernize the Indian kind of payment system. Now, question is not that RBI, the kind of this debate was there when the Sri Krishna Commission was there, that financial service, that supervisory body was created. RBI was really wanted, because RBI is ultimately responsible for the integrity of and financial stability of the economy. Okay, if that power RBI has so far exercised to a large extent, the financial crisis which happened, RBI managed the things extremely well.
Right.
Now, question is that public sector banks and private sector banks, if you look at it, there is nothing you can say that the productivity or the performance of the private sector bank is much better than the public sector banks. Only on the case of the credit quality, yes, that is true.
Okay.
But it is also true that the public sector banks comes
Point
under
taken.
many other government schemes they have to finance, which is not there for the private sector banks.
Okay.
So
Mr. Sorry to cut you short there, Mr. Nag, but I'm going to take the point that you're making to Mr. Dua. Yes, Mr. Dua, you wanted to raise something. And also, my question to you is, panelists have said that the RBI does have immense powers. Should these powers then be channelized?
The two topics come to my mind in this context. One, 22 banks, when they've been nationalized, we've had, at that time, there was no separate department of banking, what originally it was called, and later on financial services. They were being managed light-handedly by the government as the owner, but operational role was much more, or operational supervision used to be much more in the 70s and the 80s of the RBI. RBI, I think, is in a position to exercise the functions which are today vested in the government with respect to these 22 banks. Some of these can easily be given away to the RBI, and that's the kind of a request which Mr. Urjit Patel has made. I think if we are talking about empowering RBI more, at the same time we will have to lighten the government rather than have two duplication of role being performed by both. As such, the bank senior executives feel that they are hemmed from both the sides. The guys, the moment, half the time they are all spending in Delhi, the other half in Bombay. So they don't know where to go to work if there's a Chennai-based bank or elsewhere. So making the role of the government much lighter, whether it is by merging the Department of Financial Services into Department of Economic Affairs, which used to be the position at one time.
Right.
There was no separate Secretary Economic Affairs would also take care of issues of the bank, maybe a way out. But having said that, I think the Banking Operations Department under one Deputy Governor in the RBI and 3 other Deputy Governors around, probably each one is equally important. That is where we have probably multiplicity of the other roles being emphasized much more, whereas what the RBI should be doing is looking at not just the policy issues, but the operational issues of the banks much more than before. This would mean that you don't keep the job vacant for 6 months as we have done till last week.
Right.
When the job was filled up after a 6-month gap, that you give greater importance to the banking operations in the RBI scheme of things and make sure that it's well strengthened, they have the powers, and the banks take their directions from one place, and the directions should not be transactional.
Okay.
The directions have to be more by way of guidelines, norms, and other things. Probably that could happen if the government were to, in the light of what the government has seen now, NPAs of such huge orders, that this is a time to sit back, do introspection, and say, going forward, could it be handing over many of its functions, including as a shareholder, to the RBI?
Talking about the NPAs and talking about how the 21 public state-owned banks are doing, Subhomoy, 2 of them seem to be doing well, profitable, Vijaya Bank and India Bank. What is it that they're doing differently?
It's just a question of luck. I mean, because all of them give out the same loan, the same way, just that simply that their loans haven't turned sour. There's no difference in the way each one of these banks evaluate their loans. Mr. Dua and Mr. Desai, they've been in the government for ages and they can give you lots of stories about this, and I'm sure they'll agree. It is just a question of luck that they are today not in the fire. It's got nothing to do with the intrinsic quality of those banks. But let me ask you something. this trouble with banks we've been having regularly. Big Picture has talked about this several times. When Mr. Modi came to power, we talked of Bank Boards Bureau. The idea was clearly to distance the government from the executive function in the banks, professionalize banks recruitment, and also give directions. Why did we allow that to suffer of collapse? Today, Mr. Jaitley is saying, I mean, rather a few months ago, that it was RBI which should have been responsible more on the PNB. RBI has turned around to say it was not that we were sleeping on the watch, but you didn't appoint, as Mr. Desai has pointed out. So all of that was supposed to be exactly settled by setting up Bank Boards Bureau by DFS to be housed in RBI, so that both would be talking to each other. It was supposed to be created that way. We allowed that one to go off. I'm not saying that's a perfect body, but what I'm saying is that it makes me apprehensive that we'll be going around in circles trying to find out who's responsible and pulling at each other for power, DFS and RBI. But unless some radical thing, like as Mr. Desai is saying, like you can get away, remove DFS, do also this thing,
right.
That sort of thing. Otherwise, we are going to be repeatedly visiting this thing. Frauds will happen in banks.
Sure.
But otherwise, but this running at sort of let's get somebody to a scapegoat. This won't get us anywhere.
Right. Closing comments now from all my guests. I've got limited time, so I'm going to ask you to be brief.
I would
starting with
say,
you, Mr. Desai.
following on what Ajay was saying, allow the RBI to exercise some of the oversight functions which today the government is trying to exercise very, very poorly. I'll give you one small example, if you give me just a minute. There was a time when there was a danger that the banks would give too much money for real estate projects. The then governor, I will not name him, was a very bright and brilliant man. The then governor quietly increased the provisioning requirements for these loans so that calmed down the atmosphere. Because he anticipated that if they go this route, they'll run into trouble. That's the sort of management which cannot be done from Delhi. It has to be done from Bombay.
Sure.
So please allow the RBI governor, who is far better positioned to do this type of thing than this joint secretary sitting here in
Fair
Delhi.
enough. Mr. Nag, your closing comments on the program.
Yeah, I think the only thing I would suggest that RBI's power will be much more, they have a de jure power, but de facto power will be much more if we keep the government at arm's length from the day-to-day operation of the banks. Government must be, as a owner, can create a holding committee or holding kind of a structure, but they must not have a day-to-day kind of a directions coming from the Department of Financial Services to the bank's chairman.
Okay, Mr. Dua, your closing comments on the program.
The appointment of the directors of the banks, we must involve the RBI. Otherwise, nominees of the governments, now we've seen independent politicians being appointed. Politicians allied to the ruling party come there. Bureaucrats who may have had some axe to grind or have one, they continue. And we are seeing that they are not exercising prudence to the level required, and the professionalization which is needed to run the banks is today lacking, certainly at the levels of governance like the board of directors.
Subhomoy, close the show for us with your concluding remarks.
I would say that ultimately you'll have to look at selling these banks. You just can't have two categories of types of banks. There will be a problem.
Okay, all right. On that note, then, we'll call it a wrap on this edition of The Big Picture. Thank you to all my guests for joining me on the program and putting things into perspective for us. That's it from me. See you again next time.